This is The Asia Trade. I'm Avril Hong in Singapore.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Oil plunging for a second day as a fragile Middle East ceasefire holds after early breaches. President Trump arrives at the NATO summit, signalling he wants to keep crude flowing out of Iran. A Wall Street tailwind for Asian stocks with the Nasdaq 100 hitting a record. The Fed chair telling lawmakers that rate cuts are coming, but refusing to commit to a timeline. And we'll be live at the World Economic Forum in Tianjin as investors await for an appearance by the Chinese Premier for clues on any further economic support.
Let's take a look at how markets in Asia are shaping up. Maybe we see a bit of a cautiously optimistic open as these signs that the Israel-Iran truce is holding despite some earlier stumbles. We are also keeping watch, of course, on how markets receive the commentary from Fed Chair Powell. He gave a relatively balanced overview, but we've also seen how markets have been pricing in a little over 2 cuts for this year, and the pricing for July edged up a little bit as well following Powell's comments. Looking at dollar yen hovering quite flat now around the 145 handle. Haidi.
Yeah, take a look at what else we're watching, particularly when it comes to the outlook for oil, as we see oil now ticking a little bit higher after what has been a couple of days of weakness, particularly in light of this fragile truce at this point holding, despite some concerns about the resilience of it from either side, right? We have seen a double-digit percentage declines when it comes to the last 2 days of trading for crude there, but at the moment we are seeing a pretty sort of decent level being held at just over $65 when it comes to WTI. Taking a look at Nasdaq futures, we're looking a little bit softer after the gains we saw overnight as S&P futures, and watching treasuries as well, as we did see some of those moves across US bond markets in the overnight session.
Yeah, as you alluded to there, it's really about Israel and Iran appearing to honor the ceasefire that was brokered by the US president, and that follows on from his sharp rebuke over initial violations by both sides.
I'm really unhappy if Israel's going out this morning because the one rocket that didn't land, that was shot, perhaps by mistake, that didn't land. I'm not happy about that. You know what? We basically have two countries that have been fighting so long and so hard that they don't know what the they're doing. You understand that?
Let's bring in Bloomberg editor Michael Heath and our White House reporter Akela Gardner. Akela, let's start with you first. Interesting tone that the U.S. president has taken on the truce. What exactly did he urge both sides to do?
Yeah, you heard the president using very strong language, using an expletive there, sincerely saying that he wants the ceasefire to hold after Israel basically destroyed a radar complex near Tehran, and you had Iran also firing 3 missiles also at Israel as well. And so the president is really wanting this ceasefire that he declared last night to hold. And this is a huge thing that he wants to secure because there was criticism of his decision to strike Iran's 3 nuclear facilities. And he wants to really bring in this era of peace. That's what he's been saying, that after the U.S. took that action, that he really wants to usher in this era of peace and create the ceasefire between Israel and Iran.
And Mike, as this sort of fragile truce holds for now, so much focus remains on exactly the state of play when it comes to the uranium program, right? These stockpiles, we had heard reports and satellite imaging that they had been moved. I mean, what do we know? Is it possible to kind of know what the state is and how quickly it could potentially be recovered?
Yeah, I mean, it seems that what really needs to happen is that the International Atomic Energy Agency, its inspectors need to be able to agree with Iran to go and you know, to be able to get their work going again, kind of thing. But Iran is obviously a bit sceptical about dealing with the IAEA after it was, it's always maintained it hasn't been building a nuclear weapon, and that the agency should be protecting Iran given that it has inspections, it goes through all the processes. So the question is whether Iran's prepared to allow the inspectors back in, and we can sort of get back into a situation where everything's accounted for. But at the moment, it's not. And of course, there's also these other reports that, when President Trump said that some of these facilities have been obliterated, that in fact the damage wasn't so great. Now, these are all preliminary reports. Really, people, as you say, you need to get in on the ground to see how much damage has been done, and how long it would take to fix it. But the real key question at the moment is, where is this enriched uranium? There's about 400 kilograms of it. Iran notified the IAEA that it was moving it once it was under attack from Israel, and it's unaccounted for. And theoretically, the estimate is that could be enough for 9 or 10 nuclear weapons or bombs.
And Kayla, at the same time, we're seeing President Trump being really feted at the NATO gathering. We've seen this sort of month-long charm offensive by the Secretary General as well. Is that going to work in terms of being able to garner a bit more US support for this level of funding?
It's hard to say whether it will work, but we certainly know that the NATO Secretary General has been trying to charm the president. The president posted a long text message that he got from the secretary today on Truth Social, basically applauding him for the ceasefire that he has secured in the Middle East. But there's two really huge issues that are going to come up during this summit. One is that Article 5 commitment from NATO members that essentially says if one is attacked, all will defend. And the president did not give a straight answer when he was asked today whether he was still committed to that article. And at the same time, you have the president asking allies to up their spending to 5% of GDP, and at the same time saying this shouldn't necessarily apply to the U.S., specifically because the U.S. is not in Europe. When you look at conflicts like the one that we're seeing in Ukraine, he says they don't have the same sort of stakes that many of these countries have when it comes to those threats. And so the secretary is certainly going to be looking to get those commitments from him, but he is not yet committed to doing that.
Mike, when it comes to NATO and these defense pledges, as Akela was just alluding to, given the European state of play with the Ukraine-Russia conflict, what exactly are the considerations at this stage?
Yeah, Avril, I mean, Germany has sort of really stepped up and has said that it's going to build a substantial military to help defend Europe. And many countries have said they will meet this 5% pledge. And generally speaking, the sense is that President Trump has a pretty sound footing here in demanding a lot more spending from Europe. This is a very rich continent. It runs extraordinary social programs that the US is unable to afford, and it really does need to do more for its own defence. But the problem also is this: there's a couple of things. There's the Article 5, which I'll come to, but Spain has asked for an exemption, and then from the 5%, and then once it's done it, Slovakia sort of asked for it. So this then starts to fray this consensus, and it's very, very hard to bring all these countries together, and they've done a pretty good job so far. But I don't think that I think they're really going to have to commit to this. The problem with the Article 5, though, with President Trump not giving a straight answer, is NATO unravels if you don't have this all for one, one for all idea of it, and that's what has always spooked Russia. It's why the moment Finland joined NATO, suddenly there's no overflights there. It just, the Russians always respect strength, and that's what NATO has been, this consolidated bloc. And President Trump sort of questioning that really does eat away at the fabric of what NATO is supposed to represent as a defensive bloc.
And Akela, this social media posting about China being able to now resume buying Iranian oil by the president has really confounded onlookers, his own government, really, given years of sanctions. How do we interpret this?
Well, the president does have a habit of making policy shifts on truce.
All right, looks like we've lost connection to our White House reporter, Akela Gardner. But Mike, just wondering if you could just weigh in as well. I mean, as Haidi was just talking about, when it comes to this shift, these pronouncements from the U.S. president often coming on social media, to what extent, can we take this seriously when it comes to potentially the shift on how China can now import Iranian oil?
Yeah, I mean, look, as I think my colleague was about to say, is that these sort of shifts on the run, on the fly, or on the run, come on his social media platform, on Truth Social. But what I think the broader point here is that President Trump's trying to extend an olive branch to Iran, and we saw that when Iran retaliated to the US bombing with, by warning ahead of time that it would hit the base in Qatar, allowing the US to evacuate it, allowing Qatar to clear the airspace. Trump thanked Iran for actually doing that, and he wants to try to build a rapport after this to get an agreement on this nuclear issue, and at the same time he sort of wants to build some bridges with China. So whether he can actually allow this to happen, these sanctions, a lot of them are legislated, so we just have to see how that would actually work out. But I think that there's an effort to try to extend an olive branch to those countries that talking is better than fighting. As Winston Churchill used to say, jaw better than war. So Trump seems to be very much of that ilk at the moment.
Yeah, war and peace. Michael, thanks so much. Our Bloomberg editor, Michael Heath, and our White House reporter, Akela Gardner. Now, of course, the other big story we've been tracking, Fed Chair Jerome Powell has faced questioning on Capitol Hill, repeating that policymakers need not rush to adjust rates as they await more clarity on the impact of President Trump's economic policies.
The effects of tariffs will depend, among other things, on their ultimate level. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
Our executive editor for Asia Markets, Paul Dobson, joins us now for more. What is your initial read on what Powell said on Capitol Hill? I mean, on one hand, he's saying they don't know what these tariffs are going to mean for inflation in the back half, but that it might not be as bad as earlier forecasts.
Yeah, I think he's trying to say as little as possible, right? Which is an art that I think that central bank governors learn over time. Don't pre-commit, don't give the market too much of a steer one way or the other. And yet the market still took something from it. And what it took away from it, or what it's feeling is that, Powell saying as long as inflation doesn't come back, then we'll be cutting interest rates sooner than later. And the market heard sooner rather than later and jumped on top of it. And basically, so we got lower yields. We have the market fully pricing in 2 Fed rate cuts for the year, a little bit more beyond that as well. We heard from Bowman, we heard from Waller over the recent days, pointing to the idea that even July could be in play, and the market is quite excited about that as well. So lower yields across the board and supportive for equity markets as well.
Yeah, this is a market that's sort of proactively pricing in the supportive measures, right? There's a pretty big risk, given that we're counting down to the expiry of some of these trade truces as well. There's a great deal of uncertainty when it comes to tariffs.
There is, and the inflationary impact as well. And so, for example, we have a story from Bill Gross overnight, and his view is that Treasury yields can't go a lot further down from where they are currently because of those risks and because of the US budget and spending risks as well on top of that. So there's still all of that uncertainty in the market. We're 2 weeks away, right, from the deadlines that we have for the tariffs. All else being equal, that a sort of a period of relenting from the tariffs should run off in 2 weeks' time, and then they should be back on. But the market doesn't seem to really believe that at all. It's not pricing in that as a risk. I think, if you look at where we are with equities, you look at where we are with the Treasury market as well, people are more thinking that we haven't seen a great deal of progress, but we have seen some negotiations, and that will probably be enough for most of them, at least, to roll over. So it's not being priced as a particularly big risk anywhere at this moment in time. And yeah, of course, we've seen the sort of wildcat approach many times before. The blow up and then the retreat. So there could be much more scope for financial market volatility as we get closer to that date.
Even as we keep an eye on volatility, it looks like the market's ability to look past risks is really quite remarkable. Is this, we're clear for liftoff, and to what extent might AI come back in the driver's seat?
Yeah. So tech had a good day overnight as well. higher beta and all that. And that narrative hasn't really gone away completely. And for Asia's markets, for that matter, as well, particularly China, we're still seeing a lot of people getting very excited about the potential for gains there as well. So it's going to be a continuing theme, right? And we're still figuring it out, like upstairs in the newsroom every day, we're looking at AI and how we can bring it into our own work. And I'm sure the people all around the world are doing that as well. And so that bodes well for that continuing rollout. Looking at the data centers as an opportunity, for example, looking at the companies, obviously, at the vanguard, and those that are really finding business models that are going to work and be able to actually generate cash and revenue from the AI trend.
Yeah, AI as a thematic play. Thanks so much. Our executive editor for Asia Markets, Paul Dobson. Coming up on the Asia Trade, we discuss the latest developments in the Middle East with Johns Hopkins University's School of Advanced International Studies and the Carnegie Endowment. We'll head to the WEF meeting in Tianjin, where UBS outlines the hurdles ahead for China's growth. Plus, Nomura breaks down the momentum they see in Korean equities. Much more ahead. This is Bloomberg.
What's your take on the oil price situation right now, and are you concerned?
I love it. It dropped almost $10 yesterday. I put out a statement, get it down, because a lot of people aren't able to do things when the energy goes down. We're going to have a lot less conflict.
President Trump there speaking to reporters aboard Air Force One, and separately the president has signalled he wants to keep oil flowing out of Iran. It's a stark departure from the earlier strategy of squeezing Iranian energy exports to apply pressure at the negotiating table. Take a look at what we're seeing when it comes to oil, and there has been double percentage slump that we've seen over the past 2 days. At the moment, we are seeing a little bit of upside in the early part of the Asian session for WTI as we continue that assessment of the ceasefire. We also had an industry report showing another drop in US crude stockpiles there as well. Over those 2 days, you've seen that decline of just about 5% when it comes to New York traded crude. At the moment, Israel and Iran appear to be honouring that ceasefire brokered by President Trump. That obviously reduces that risk premium and the risk to suppliers, but the fragility is kind of what we're looking at. But it's been quite interesting, Avril, that we saw Trump giving China, the biggest crude customer of Iran, essentially the green light on social media to continue buying its oil. Is this kind of being seen as both an olive branch to Iran and also to China, right, as we kind of restore the concentration and the focus back onto these ongoing trade uncertainties?
Yeah, given the uncertainties, though, you also wonder how seriously China is going to take this. Might they still be taking a cautious approach when it comes to potentially having these sanctions in play when it comes to imports of Iranian oil, Haidi?
Yeah, let's get some more on the latest developments in the Middle East as this fragile truce appears to be holding for now. Let's bring in Randa. She's a senior fellow at Johns Hopkins University School of Advanced International Studies. It's been a pretty chaotic 12, 13 days, but certainly over the last 24 to 48 hours, there's been a lot of to and fro and developments. How do you assess the sort of ongoing stability of this truce and whether it can pave the way for sort of more of a brokered ongoing peace?
Well, right now it remains fragile. It's unstable, and but so far the two countries, Israel and Iran, seem to be interested in maintaining this truce. Now, whether this will lead to whether this will be durable in the long term, I don't know. It's too early to tell, and because I think Israel is interested, particularly the Israeli Prime Minister, is interested in making sure that Iran will not be able to reconstitute its capacities in the nuclear field. And based on the preliminary assessment from the IA, the Defense Intelligence Agency, doesn't seem that the hits have dealt serious damage to the nuclear facilities, that it might have set back the nuclear program by few months, but it's not something that is going to be a sustainable damage that will prevent Iran from reconstituting that program.
Randa, I was looking back at previous conversation. I think one of the last times we spoke was actually when we saw the assassination of the Hezbollah leader late last year. We were talking about the implications for Iranian proxies. What's your assessment of that situation now, and how does it sort of dramatically change the landscape? Because at that point we were sort of not looking at the possibility of direct confrontation. Obviously, things have changed so much since then. Do we have a weakened Iran, do you think, or do they sort of regroup and look for revenge?
This is a very interesting question. I think the Iran proxy network, including Hezbollah, has been weakened, seriously weakened, but it's not out. They still maintain some capacities. We don't know exactly how many missiles they still, for example, Hezbollah maintain, but they do, according to some Israeli military estimates, about 20% of their missile capacity is still intact. So they can cause serious damage. But I think for now, their interest is to maintain a low profile and to keep whatever capacities, no matter how weak they are, to keep them intact and to keep their political profile in the countries that they work in or they currently operate, be it Hezbollah in Lebanon, be it the Iraqi militias that are pro-Iran in Iran, be it the Houthis. They have all looked and seen in action Israelis' military capacities, Americans' military capacities, and they don't want to incur their wrath. And Iran is interested in maintaining this network, this proxy network in place, no matter how weak and decimated it is, as it is currently and in the future will be reviewing its military deterrence strategy and what are going to be the components of this strategy and what role will this proxy network be playing in this strategy going forward.
Randa, it also sounds like the regime might be a bit more focused on survival at this stage in Iran. To what extent, then, do you see the ceasefire as a sort of window of opportunity for the conversation to be about nuclear diplomacy?
You are correct. I think right now the number one priority for the regime in Tehran is regime survival, and all the means are going to justify reaching that objective. And one of the means that their diplomats and even the president, the Iran president, has been talking about is diplomacy, and that this is now a better or much larger window for engaging in negotiation. The question is going really to be whether Israel, and particularly the Israeli prime minister, is interested in stopping this conflict at this stage. After all, there were negotiations going on between the United States and Iran about this about their nuclear program, and those were preempted by Israeli military action against Iran. And so the question is going to be Israel, the interest of the political establishment, Israel, the prime minister, and whether the U.S. president will, basically apply the right amount of pressure on the Israeli prime minister to seize any kind of military action going forward against Iran.
Yeah, and we saw, despite the shaky start to the truce about 24 hours ago, that, after Trump tweeted or talked about how Israel should stop dropping bombs, it actually held up. I just wonder to what extent you think then the U.S. president can continue applying pressure.
I think the U.S. president is really interested in adding another win to his record as a peacemaker. The first win that he has secured on this, in this arena has been the ceasefire between India and Pakistan, and he has been talking about it. And so he's interested in really, adding more wins, and I think achieving this ceasefire, he looks at it as another win, and achieving a sustainable and durable ceasefire is going to be important for securing this win. The question, again, is going to be the two parties that are involved in this conflict. Iran, I think, is interested in stopping these hostilities because of the price that they have so far paid for in this conflict. I don't know what are going to be, whether the Israeli prime minister is interested at this point in basically declaring mission accomplished and stop where they have, what they have achieved until now. My guess is that he might look at the short-term ceasefire and then in the future, do engage in whatever kind of covert operations in order to make sure that Iran does not reconstitute its capacities in the nuclear arena.
Right, because if this is about eliminating the existential threat seen to Israel, it's hard to say that that mission has been accomplished at this point, right?
I mean, given the early battle assessment, damage assessment that we are hearing coming out of the Defense Intelligence Agency, it doesn't seem that the nuclear program has been decimated or has been, weakened to the point that Israel will not be able to reconstitute it in some time in the future. It's not going, as the damage assessment is saying, maybe by a few months, maybe by a year, but that technical knowledge is there. The enriched uranium stockpile is there. The centrifuge looks like most of them are still there. So it's going to take some time for Iran to reconstitute it, but it is an achievable objective.
Randa, really good to get your insights. Thanks so much for sharing your time with us. Randa Slim, Senior Fellow at Johns Hopkins University School of Advanced International Studies. Let's take a look at how the FX space is faring as well really quickly, because we have been seeing that dollar strength being eroded for much of this week following the ceasefire as well. It looks to be at play in the session today as well. Looking at dollar yen still hovering just below the 145 level. It's been interesting how the Chinese currency has been catching a bit and the signals that have been coming from the PBOC in the past couple of sessions. This is Bloomberg.
Let's get you back to the World Economic Forum in China, of course better known as the Summer Davos. Let's get more on Beijing's policy direction, the implications for the global markets. Our Chief North Asia correspondent Stephen Engel standing by with our next guest. Steve.
Yes, it is day two. Seems like we've been here a long time already, but day two of the Summer Davos here in Tianjin. And our first guest this morning is no stranger to Bloomberg Television, Tommie Fang, UBS Head of China Global Markets. Thanks for joining us.
Thanks for having me.
Okay, so there seems to be a lasting peace, but obviously the potential oil shock that could have arisen and still could arise is going to be a pressure on markets and investor sentiment. How do you see this lasting peace?
Well, I think
as it opposed to as it refers to the market, of course.
Of course, I think uncertainty is really the words for this year to date. So I think this just adding to another sort of angles of volatilities, which in many ways our global markets really are here to help our clients provide liquidities. So we have seen a lot of activities and volumes, but the uncertainty is definitely somewhere to be expected.
How much resilience do you think is built into the Chinese economy right now? They have built some resilience because of the trade war. Now there's this other external shock.
Well, overall, I think China really is on this journey, as I coined it, this whatever it takes since September last year. I think by and large, Chinese policymaker is really sticking to that agenda, which global investor is excited to see. But economy-wise, there are quite a few things we are still looking forward to, especially on the demand side. So we need more stimulus on the demand.
I'm glad you mentioned September because that's when the big stimulus package came out. It's been quite a few months now. It's been 9-10 months, obviously, since then. So where and what should they do on the policy front going forward?
I think first, they really need to stick to their course. I think under this world of uncertainty, have that stable and a transparent policy is very important for global investor. I think second, I think there are a lot of resilience, as you mentioned, but overall, we still see so the price reflection here in China still have the downward pressure. Yeah. So continue to stimulate on the demand and the consumer side.
So one bank, your competitor, has called this China's 3D challenge, right? So debt, deflation, demographics. But there's also Donald Trump, there's diplomacy, there's all kinds of challenges. What should they tackle first?
I think overall, it's really stick to the overall confidence of the market and really look at the demand side and the consumer side.
So get consumption going. What do you think the message from Qiang, the premier, who will be speaking here in a keynote, what do you think his message not only will be, what should it be?
Well, I think Premier Li would definitely have a lot to cover. We're all looking forward to that. But he definitely bring that sort of continuous stimulus into the market. And also particularly the investor is really riding on this, whether it's DeepSeek or whether it's the overall technology and innovation wave, or using China policy's words, this high quality growth. But having that combined with the data to show that growth from the overall markets. Yeah. So I think that's where the market and the investor wanted to hear.
I'm guessing he's going to say the word stability quite a few times, and that's the message to foreign investors, right? What are you seeing right now on the markets? Because we seem to have erased most of the losses that we saw following the eruption of the reciprocal tariffs on April 7th, when the market really tanked. We're back to where we were essentially at the beginning of the year. Where do the markets go from here?
Well, so China, you can see so overall Hong Kong is having a very good time, both from the IPO side and also the overall liquidity. So that drives the overall valuation for Hong Kong. A bit related to the overall expectation of maybe dollar will weaken. Yeah. So having that Hong Kong dollar pack with a cheaper overall asset will help Hong Kong market. And China Asia, there's still, I think, to me, there is a lot of more upside from here.
Yeah, you think so? I mean, do you think the trade truce with the United States allows policymakers to sort of pause? They don't necessarily need to bring in the national team to support stocks. They don't necessarily need to do a big bazooka on stimulus because, again, there is a truce. We have a deadline of mid-August, though, that those tariffs could go up again. But right now, there's a truce.
This is really hard to say. I think overall, the market have a bit of a concern whether with that truce, the stimulus package will be strong enough. But my read is Beijing is taking the view of whatever it takes. So that means if whether it's truce or whether it's the fundamental economy is not enough to bring that growth to 5%, they will add more into the stimulus package. So that's where I think the Beijing should do, and probably be a little bit more proactive, be a little bit more bold in terms of the stimulus, especially, again, on the demand and the consumer side.
How optimistic are you that the United States and China can reach, I mean, it's not going to resolve all the differences overnight, but that they can at least agree to keep on talking and have a lasting truce instead of ramping up those tariffs?
So I'm cautiously optimistic. So, the Geneva agreement, in many ways, is above investors' expectation. Yeah. We definitely see now, who are the leaders in terms of negotiation. Scott and Vice Premier He are leading that conversation. And also it seems the both presidents are talking, so which is very important.
Let's go back to the markets and talk about Hong Kong, because the Hang Seng is in a technical bull market, up 20% year to date. The Hang Seng Tech Index up about 18.5%. There's a lot of tech companies or other companies in the pipeline for IPOs. What's your second half outlook, given the significant run-up we've already had in the first half of the year?
Sure. So normally, market doesn't go straight lines. So I would actually expect some kind of normalization. But given where the market is and also the liquidity, Hong Kong will continue to do well. But the overall China asset class, especially onshore here in Asia, are relatively much cheaper now compared to global emerging market and also Hong Kong. So there will be some of the catch-up from the onshore market here.
All right, Tommie, great to see you. Thanks for kicking off our Day 2 coverage here. And we'll all be listening to Qiang, the Premier, speaking, I think, around 10 o'clock local
looking
time.
Forward to that.
Okay, Avril, we're going to send it back to you from Tianjin.
Good stuff, Steve. Thanks very much. Our Chief North Asia correspondent, Stephen Engel, in Tianjin at the World Economic Forum. Some of the stories we are following: the European Union's industry chief says the bloc plans to impose retaliatory tariffs on the U.S. if President Trump keeps the 10% baseline levy on European products after negotiations. Brussels is rushing to clinch a deal with Washington before tariffs jump to 50% on July 9th. However, many EU officials expect most U.S. tariffs to remain in place even if an agreement is reached. A special counsel investigating former South Korean President Yoon Suk-yeol has requested an arrest warrant after he skipped 3 formal requests for questioning. Yoon was impeached and removed from office earlier this year following a failed attempt to impose martial law. The arrest warrant has been filed on charges of obstructing public duty during the investigation. And U.S. Treasury Secretary Scott Bessent says Republicans could reach a deal on state and local tax deductions within the next 2 days. House lawmakers have backed a version with a higher cap on spending than the Senate's proposal. Bessent met with Senate Republicans on Tuesday and remains optimistic the bill will pass by next week.
I had a very successful lunch meeting with the senators. I think that we are on track for hopefully for a vote this Friday for July 4th for the tax bill. President is doing peace deals, tax deals, trade deals, so he's done a peace deal. I think we'd have the tax deal done by July 4th, and then we can finish with the trade deals.
Well, the NATO summit is getting underway in The Hague, overshadowed by the tensions in the Middle East and division over military spending. Spain is refusing to agree to the bigger defence budgets that President Trump is demanding. We asked the EU's Foreign Affairs and Security Policy Chief, Kaja Kallas, about the summit's goals and the situation between Israel and Iran.
The international law says, gives you good 2 reasons where you can use force. One is self-defense, and the other one is by the mandate of the Security Council. So those who use force have to also justify that it complies with the international rules.
And are you satisfied that it does, or you're not sort of in a position to make that appraisal quite yet?
Well, that is not up to us to say, really. Of course, we have said that the Atomic Energy Association needs to have assessment and also get an access to the nuclear sites and everything that is concerning Iran. Europe has always been very concerned that Iran does not acquire a nuclear weapon. We have been very clear on that.
And onto the business of NATO, are you confident that everybody will sign on without caveat, without exception, to the 5% NATO goal tomorrow morning? Are we going to get that, or do you think that Spain is going to pose a problem there?
Well, we have heard, of course, Spain raising the issues that they are raising. I think it's important that we get the decision of moving to 5%. It's a very ambitious target, also requires a lot of difficult decisions from member states. That is very clear. And, the trouble with the defense spending is that you need to do it while you have peace. And actually, people don't need or don't see the necessity of the defense spending. But when you actually need it, it's too late because of everything. And right now, the understanding for everybody is that we need to invest more in order to deter aggressors from looking our way.
And have you spoken to Pedro Sánchez? Are you afraid that this could potentially endanger the whole sort of project here?
Of course, NATO Secretary General is working on that. I try to keep the European countries together, and we have also put forward, different means how member states can do this. I mean, opening financial possibilities for member states to actually spend more, and also how we can do more jointly, joint procurement, joint projects, because the defense is regional, not national anymore.
The EU's Foreign Affairs and Security Chief Kaja Kallas speaking with our colleague Oliver Crook at the NATO summit in The Hague. More ahead on the Asia trade. This is Bloomberg.
Despite elevated uncertainty, the economy is in a solid position. Overall, a wide set of indicators suggests that the conditions in the labor market are broadly in balance and consistent with maximum employment. The effects of tariffs will depend, among other things, on their ultimate level. Increases in tariffs this year are likely to push up prices and weigh on economic activity. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
Fed Chair Jay Powell speaking to a U.S. House panel on Capitol Hill. Let's check in on how U.S. Treasury futures are shaping up across the curve after we saw Treasuries gain with investors focus on the prospects of Fed rate cuts, seeing it moving sideways now based on Treasury futures. Of course, Chair Powell appears for a second day on Capitol Hill. Haidi.
Well, Avril, the AIIB President Jin Liqun says that free trade remains the strongest defence against rising tariffs. In an exclusive interview in Beijing, Jin also signalled openness to working with non-member countries, including the United States.
I invited the United States and Japan to join, and I had extensive discussions with them. Quite a lot of people were my old friends, right? We understood each other. So I respect the decision-making of any sovereign government, but I assure them, for whatever reason you choose not to join, it's not a problem. We can work together. For instance, as you know, we work with the U.S. and the Japanese financial institutions, and we are open to the professionals from U.S. and Japan. They are working very happily in our institution, and some of them are taking very important positions. Financial institutions and business companies are welcome to compete in the international competitive bidding. So we are inclusive.
Your member countries are now grappling with the issue of tariffs. Are you seeing heightened lending this year, for instance, from member nations needing more funds as a result? Tariff issue, certainly, I hope it will be eased, if not completely worked out. Tariff issues will certainly impact on some of our member countries, right? But also, I find this is going to lead to a different kind of scenario of global development. If the tariff is an issue, the best way to deal with the high tariff issue is for a group of economies to be working together, maintaining free trade. So in terms of the geography, population, resource endowments, I think ASEAN and the GCC and Central Asia, these countries can work together without any problem. And on the other hand, the European countries as a bloc is also interested in working with Asian countries. So I think there could be a solution to deal with the tariff. And if that is the scenario we've been looking at for kind of solution, probably tariff issues would be gone later on. Mr. Jin, back in October, you talked about how it will take time for stimulus to play out, and we're seeing that. Retail sales is rising. We're seeing even consumer stocks doing really well. Is it sustainable, or is this a sugar rush for the country?
You're referring to China?
To China.
Yeah, I think the government has issued a series of new policies stimulating the economy, and not just one shot in the arm, but also all these policies will be doing, I think, its job in promoting the private sector development, creating more jobs. And you will find most of the innovations, creative new things were developed by the private sector. You see how vibrant this is. And the government provides the enabling environment for all of this business in the economy to do what it should do.
AIIB President Jin Liqun at their annual meeting in Beijing, speaking exclusively with Bloomberg's Haslinda Amin. More from this year's AIIB meeting ahead. Indonesia's finance minister sits down with Bloomberg's Haslinda Amin on Insight to talk tariffs and the future of U.S. trade ties. You can catch that interview at 11 a.m. in Hong Kong, which will be 1 p.m. in Sydney. And of course, let's take a look at how futures are shaping up in the Asia-Pacific as well. It's pointing to a pretty mixed picture, both in Sydney and Japan. Maybe investors cautiously optimistic despite some of the uncertainties out of the way, given how this Iran-Israel truce does seem to be holding up. But we still have a tariff deadline that we are counting down to, and the Fed Chair Jay Powell set to speak for a second day on Capitol Hill oil, the concerns about the impact from tariffs on the inflation outlook. Of course, we did see pretty solid gains on Wall Street overnight. Futures in the U.S. Pointing to very slight declines. Now, aside from that, Haidi, we're of course keeping a close watch on how oil prices have been faring, seeing a bit of a tick up today against the backdrop of the dip in U.S. inventories.
Yeah, that's right. And a little bit of an uptick, but of course comes against the backdrop of a couple of days of a pretty solid pullback in that risk premium, right? Not just the geopolitical complications that continue to sort of change the risk outlook, but we've also had another drop in U.S. crude stockpiles, according to the latest industry report. The fundamentals are kind of what traders are now focusing back on, which is a world that is pretty awash in oil and pretty subdued when it comes to demand from major economies, the likes of China. Seeing New York crude ticking up by just over 1% at the moment. We're also watching iron ore, given that there are expectations that perhaps we get a little bit more commentary around fiscal and monetary policy support out of China today from the World Economic Forum in Tianjin. That'll give some support when it comes to the likes of iron ore, copper, some of those more sort of China growth proxy commodities and metals that we're watching at the moment. A little bit of downside for iron ore traded in Singapore. Gold at the moment is actually edging a little bit higher, but of course we have had some declines, including the biggest fall in more than 5 weeks, as we see that sort of honouring of the fragile ceasefire agreement. More ahead on the Asia trade. This is Bloomberg.
This is the Asia trade, the latest from the corporate front. FedEx shares fell in late trading after its profit outlook for the current quarter missed estimates. It also declined to give a full-year forecast, citing an uncertain global demand environment. FedEx says U.S.-China shipments fell sharply in May, and volumes on its most profitable trade route are expected to remain under pressure. New Zealand-based fintech company Xero has agreed to buy U.S. payment software provider Melio. The deal, valued at $2.5 billion, is Xero's biggest ever acquisition. The cash and stock deal includes $500 million in additional performance and other payments over 3 years. Xero says the combined business is expected to accelerate its U.S. revenue growth. Shares of California-based chip designer Avril rose more than 20% after Bloomberg revealed that it's mulling a sale. Our sources say it's reached out to potential buyers with the help of bankers. Avril makes chips used in security and self-driving systems and could appeal to rivals interested in bulking up their automotive portfolio. Haidi.
Take a look at what we're watching when it comes to the Bank of Japan summary of opinions. We're hearing from, this is the summary of opinions from the June policy meeting. One BOJ member saying that they're watching to see if the outlook is realised without bias. The uncertainty, though, is extremely high over the outlook, with the need to support the economy now with the current rate environment. We're seeing the yen at the moment pairing its gain against the dollar as the markets digest that summary of opinions. One BOJ member also saying that it's appropriate to maintain the policy for the time being, and it's possible to boldly proceed with the adjustment. Of course, a lot of uncertainty when it comes to the Bank of Japan, not to mention sort of some of the oil and inflation uncertainty that continues to cloud the outlook going forward. But we're watching to see sort of that market reaction. A big test, of course, has been what happens when it comes to the longer end of the JGB yield curve as well. That 20-year sale really was a bit of a lukewarm auction, if you will. Clearly, the market at the moment is still very wary when it comes to longer bonds, be it you're talking about JGBs or treasuries. Those issuance plans for the BOJ will be in focus next. This is Bloomberg.
This This is the Asia Trade. We're counting down to Asia's major market opens. And of course, Haidi, with that ceasefire more or less holding between Iran and Israel, we are seeing how the market's focus seems to be shifting to the commentary from Fed Chair Powell. And they seem to be expecting these rate cuts or the optimism surrounding it.
Yeah, really refusing to give that timeline when it comes to when these supportive measures will come through, because given how much uncertainty there is, perhaps this is a market that's also coming back to start to focus on the fundamentals right away from geopolitics and looking back at as we continue that countdown to the expiry of the trade truces as well.
Yeah, and I think that also is playing out when it comes to the commentary we're getting from the Bank of Japan based on the summary of opinions from their most recent meeting. It's interesting, they cite the uncertainty of whether the outlook can be realized, but we had at least one board member saying that the normalization of JGB holdings, that is something that should continue. Interesting, we're seeing Japanese bonds catching a bid against the backdrop, of course, of what we heard from the Federal Reserve, investors focusing on the prospects for Fed rate cuts, and that is something that put pressure on the dollar along with that ceasefire. We are seeing the Japanese yen losing ground against the greenback, so erasing earlier gains. In terms of stocks, we're seeing a fairly cautiously optimistic open in Japan. Flip the board and take a look at South Korea, because yesterday it was the market that really extended its outperformance against other Asia peers. It closed about 3% higher. And really that AI optimism fueling through, driving that momentum. But we also heard from the MSCI annual review and how it will be kept as an emerging market. In terms of the Korean won, seeing that strengthening, maybe a bit part of that risk on that we're seeing filtering through into markets for another day. Haidi.
Yeah, take a look at what we're watching when it comes to the start of trading here in Australia. Of course, an energy-heavy market that we're watching. Some of those oil names, perhaps we'll see a little bit more of that sort of downside when it comes to energy and oil producers as well, given the pullback we've seen over the past couple of days, in particular for crude prices. Crude is actually at the moment ticking a little bit higher at the moment in the Asia session, but the fundamentals, of course, particularly with this latest industry report about capacity and supply, look to be really firmly pointed to the downside as the ceasefire holds. We are seeing some tepid upside there, about a 0.2% higher when it comes to that staggered open here in Sydney. Also some sort of risk appetite when it comes to the proxy currencies, the likes of the Aussie dollar, just sitting under that 65 US cent level. Also watching treasuries as well. They gained as Chair Powell said that the Fed has, quote, many paths on rates. Take a listen.
The effects of tariffs will depend, among other things, on their ultimate level. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
Let's get more on markets with Chetan Seth, Asia Pacific equity strategist at Nomura. Chetan, thanks so much for taking the time. Really good to see you. First off, your read on what Powell said. I mean, it's sounding like a very balanced approach.
I think that, yeah, that's a fair assessment. And what we also heard from Chair Powell a week ago during the FOMC was, I think they'll take a measured approach before looking to cut interest rates. And as he suggested, there's a lot of uncertainty around tariffs, whether they actually flow through U.S. inflation. So far, so good. If you look at last couple of readings, whether it's CPI, PPI, but I think the Fed will probably wait for a couple of more data points before they're ready to actually cut interest rates. So I don't think so he will commit until they have more evidence to actually embark on a rate cut.
So where does this leave Asia stocks? Can they sort of power ahead regardless?
So, well, I think, see, at the global front, there are a lot of uncertainties. There's uncertainty around tariffs, as you suggested earlier, just before this interview, that we have a couple of important trade deadlines, tariff deadlines coming through. One is in early July, then we've got the China deadline in early August. So I think there could be some focus of market participants as we go into these deadlines. So I think that's one aspect of uncertainty. As far as Fed rate cut is concerned, I mean, it really depends whether these Fed rate cuts are preemptive, where the Fed actually is cutting interest rates because they have more evidence that inflation is benign or actually moderating, or whether those rate cuts are driven by weaker economy. So if it's the former, I think equities will like it, but if it's the latter, I think then it's a bit of a concern for stocks. Our view on Asia is that at these levels, the indices that we track, whether it's MSCI Asia, ex-Japan, or MSCI China, they're broadly trading at our fair value estimates, which we at the end of 2025. So there's limited upside. So what we are telling our clients to really focus on some idiosyncratic themes, areas of the markets where we see better visibility and upside potential.
Yeah, Chetan, tell us about that focus when it comes to Greater China opportunities.
So for us, actually, China, we are tactically positive. We actually upgraded the market on 13th of May. This is the day when US and China struck that trade agreement at Geneva. And our view is that, from there on, so long as we see incrementally positive news flow as far as US-China is concerned, that might lead investors to reassess some of the risk premium that has been ascribed on China equity. So in other words, our call is essentially calling for multiple expansion as opposed to calling for a pickup in earnings growth rate. And actually, if you look at, step back and see what has happened in the last, let's say, 3-4 weeks, we've got talks in Geneva. They were followed by talks at London, which I thought were not necessarily bad, if not necessarily positive. And then, interestingly, I think a couple of days ago, yesterday, I think, there was also news flow which has not gotten much attention with media, is that China appears to be taking some measures to actually contain the export of some of these chemicals which actually go into the production of fentanyl, which, as you know, is a big issue for US. So I think one of the upside risks to watch is whether these 20% tariffs on because of fentanyl on China might actually be reduced. And I think if that happens, I think that'll be positive. So we are tactically positive. Relatively speaking, China still looks okay to us in a regional context.
As a sort of a domestic political uncertainty clears for Korea, there's been lots of questions as to when it will play catch up to what we've seen in the Japan rally. The MSCI choosing to keep it on EM status, which is obviously a bit of a setback, but you're also quite constructive when it comes to a bit more momentum for Korean equities.
I think that's right. So as far as MSCI is concerned, I don't necessarily see it as a negative. I think it was fairly clear 2-3 days ago when they came up with the accessibility review that, Korea might not make it to the DM watch list. So it's not really new news, I would say. But I do feel that there is definitely a lot of momentum for Korea equities. You can see in the fund flows, whether it's foreign flows, there's been $4 billion of net buying of Korean stocks over the last 4 weeks. We can also see flows going rapidly into offshore Korea ETFs. So ones listed in US, almost $1.3 billion of net buying over the last 4 weeks. And the other interesting thing we are also highlighting is that we are seeing evidence that retail trading participation in Korea is picking up. It's around 50%, roughly speaking, now. And if you just go back and look at the past exuberance levels for Korea, participation could go as high as 70%, 75%. So I think there's definitely momentum. And stocks, if you look at overall market, it's still trading slightly less than 1 price to book overall MSCI Korea. I just counted this morning, if you look at Kospi stocks above 5 billion MCAP, I can still find 25 to 28 stocks which are trading less than 1 price to book. And many of these companies are actually main counters, auto companies, some tech hardware stocks. So I think there's definitely momentum in Korea, at least in the near term.
Yeah, the Kospi does seem to be doing just fine in terms of attracting not just retail investors, but foreign flows, even without the MSCI upgrade. But I wonder also, what is your assessment of how important it is for some of these corporate governance reforms that the new president has talked about pushing through? How important is that going to be for a further tailwind for South Korea equities?
I think very important, and I think part of this kind of newfound love of investors in Korea is driven by hopes and expectations that we will see some changes happen to the Commercial Act in the days and the weeks to come. Now, my understanding is we still don't have a date yet when these changes might be passed. So I think there's a little bit of uncertainty around that. But if they are able to pass or make changes to this commercial act, I think that would be quite important. And the reason is that as of now, one of the concerns investors have around Korea is that minority shareholders, are essentially ignored. But once you make this as part of the law, I think this will be the duty of board of directors to make sure that minority shareholders' interests are also protected. And if that doesn't happen, I think there will be legal implications. And I think what you could potentially also see, just like what we saw in Japan, more and more activist shareholders actually participating and making sure that some of these companies essentially re-rate in terms of valuation. So I think those things are very important.
What do you think about Indian equities at the moment, particularly from a valuation point of view? There's a lot more of a shift when it comes to small, mid-caps, even some of the micro names.
So structurally, we like India. The market has underperformed a little bit over the last, let's say, a month or so, because there's been definitely more interest in Korea and also Taiwan, as we've seen with this renewed interest in AI tech thematic. But that does not mean that the attraction of India equities fades. We still feel that it's probably the cleanest story in the entire emerging market universe, or even, for that matter, Asia, ex-Japan. If you look at policy settings, they have clearly become very supportive. We've got a 50 bips jumbo rate cut from the RBI a couple of weeks ago. They started the rate cut cycle in January. They've been injecting liquidity in the banking sector, which is also helping credit growth and also banks. So I think the story is quite clear. And also, amid all this uncertainty around trade front, given India has less trade dependencies on rest of the world, it should be a relatively safety play. So, the mid caps, small caps, yes, they have rallied. Valuations have always been a concern. I mean, it's okay to see some bit of consolidation in the market, but I don't think so. The long-term story changes for India. So we are actually quite positive on India.
Chetan, always great to chat with you. Chetan Seth is an Asia-Pacific equity strategist at Nomura. Take a look at what we're watching when it comes to oil, as we did see a little bit of an uptick in WTI, despite, of course, 2 days of losses, totaling around 5% in terms of that two-day sell-off. We're seeing Brent at the moment kind of mirroring that dynamic as the fragile ceasefire continues to hold, some of the geopolitical risk premium coming down, and, of course, really returning the focus back onto potentially oversupply and also potentially that weakness out of demand from economies like China. Watching, of course, a lot of these Asian energy names as well. When it comes to the S&P 500, we've seen an almost 3% decline when it comes to energy stocks. It's been the worst performing sector when it comes to US equities. And at the moment, we are seeing Israel and Iran appearing to honour that ceasefire brokered by President Trump following his sharp rebuke over initial violations by both sides.
I'm really unhappy if Israel's going out this morning because the one rocket that didn't land, that was shot, perhaps by mistake, that didn't land. I'm not happy about that. You know what? We basically have two countries that have been fighting so long and so hard that they don't know what the they're doing. Do you understand that?
Premier Bloomberg editor Michael Heath, clearly a degree of frustration there from the president.
Yeah, I mean, look, the stakes are very, very high, obviously, and he's put a lot of political capital there. So you can sort of understand it that, the work's got in. He's particularly with Israel, his frustration with them, that the US has done what Israel wanted there, and it's backed it in terms of defending it. And then for the, any breaches of that ceasefire, you can imagine it'd be so frustrating. I'm not sure it warranted the word, but nonetheless, and it does seem like he's managed to rein Israel in and Iran. So far it seems to be holding, and all's well and good there. But it's still going to be a pretty tense situation.
I suppose is the best case scenario that this lowers the temperature, gets negotiations back on track, because if you kind of, I guess, look at the existential crisis that Israel sees, it's hard to say that that's been definitively eliminated, given that we don't know what's going on with the nuclear stockpiles.
No, that's exactly right, and I think that's really what Trump's sort of aiming for. That the US did its bit, and it was a surgical strike, and Again, Trump, as I mentioned before, Trump thanked Iran, after it had attacked a US base, which was an extraordinary situation. But Iran gave the advance warning that no one was hurt in that situation. So I think he's really keen to try to get talks underway. And just to gain some confidence that that there isn't going to be a nuclear weapon produced by Iran, and that in turn would help Israel. I mean, and assuage some of the concerns in Israel. But you're right. I mean, there's 400 kilograms of 60% enriched uranium now. 90% is what you need for a bomb. And no one's quite sure where that is. So the sooner that negotiations can happen, that the UN watchdog, the IAEA, their inspectors can get in and account for everything, the better it is for everyone. And at the moment, there's a lot of uncertainty on what, how much damage the US has done and whether Iran will come back to speaking with the IAEA or, interacting with it. So, there's a lot at stake, but negotiations would be the best way forward for everyone, no doubt.
Mike, it's also really interesting how Trump has kind of managed to get both Israel and Iran to toe the line. At the same time, also these comments to the NATO leaders. I mean, how much is he kind of keeping them on their toes when it comes to defense spending?
Yeah, Avril, I mean, I think with the, in the Middle East, in a sense, Iran was on the back foot and was looking for an off-ramp from this conflict. So it was always keen to get to sort of find a way out of it. But I think once Trump had conducted once he'd ordered the bombing strike there for Israel, it was time for everyone to draw a line on it. With NATO, it's very interesting, as you say. I mean, he's asked about Article 5, which is sort of the key pillar of NATO, that if one member's attacked, then everyone will come to their aid. And he's sort of refusing to answer directly whether the US would respond to that. I mean, he wasn't particularly negative about it. He'd say, he gets along very well with everyone and he would, he doesn't want to see anyone hurt and that sort of thing. But he's not saying, yes, I endorse Article 5. So, I think there is a bit of theatrics about it all, and he is trying to get Europe to lift defence spending to 5%. And Germany has made a real point that it is going to up its game seriously in terms of its military and its defence. And a lot of the continent has said the same. And then you've got outliers like Spain that don't want to do that, which in turn triggers Slovakia. So it's a bit like herding cats, trying to keep those European nations together. And I think he's trying to maintain the pressure. I think that's right. But he's also got this, this ongoing strange relationship with Russia. And as I mentioned before, Russia loves any division in NATO or Trump saying that he might not honour Article 5 because it sort of undermines the entire point of NATO, which is this big bloc that, that comes together with all this economic and military power and that is impossible to basically take on if it's unified.
Bloomberg editor Michael Head there. More ahead on the Asia trade. This is Bloomberg. Chinese Premier Qiang is due to address the opening plenary of the World Economic Forum meeting today in Tianjin. Our co-anchor Sherry-Ann is there and joins us now. So, Sherry, of course, we will be watching for any kind of hint of stimulus or support. What are markets focusing on?
We are watching this year's summer Davos with the theme of entrepreneurship in a new era. And last year, when Premier Qiang gave his opening remarks, he decried protectionism. He talked about how decoupling would drag the world into a destructive spiral. He's expected to speak in less than 2 hours, and we'll be focusing really on that message of stability, that China is open for business. But, of course, nothing has changed from last year. If anything, things have become worse. We're talking about U.S. tariffs on partners resuming in less than 2 weeks, not to mention that the fragile truce between China and the U.S. with the Geneva framework back in May and reaffirmed just earlier this month hasn't necessarily led to any of those exponential tariffs getting lifted. Still, there's more of a sense of optimism this year when it comes to innovation in China. DeepSeek really was a game changer earlier this year when it released that cheaper, powerful AI model back in January. The idea that China can still lead when it comes to tech innovation in a very difficult environment. And of course, we have seen how difficult it's been for Chinese entrepreneurs here on the ground. We're talking about really funding being cut venture capital drying up. Still, Zhu Min, the former PBOC deputy governor, saying that he expects to see over 100 AI breakthroughs in the next 18 months. He was speaking here at the World Economic Forum, and that's not surprising given that China holds more than half of the world's AI patents. Bloomberg Economics thinking that high-tech's contribution to China's GDP is now at around 15.4% just as of last year. This has increased from 11% just in 2018. And just to give you context, the property sector's contribution just shrinking to 19% from a peak of 25% just a few years ago.
Sherry, so what else are Chinese entrepreneurs at the meeting saying about how geopolitics is affecting their business?
Geopolitical tensions, tech rivalry between the U.S. and China really dampening the mood among entrepreneurs here at the World Economic Forum. But there's this sense of optimism still that there can be innovation achieved in this environment. Of course, we're talking about Deep-Root AI, the Chinese autonomous driving tech startup, talking about new opportunities in places like Europe. They're testing in Germany. They are having conversations with Japanese and South Korean leaders as well, given that really funding has been a challenging aspect in the practical sense of not being able to access American capital. That's been really difficult, given that really doing business with U.S. companies has become trickier. But there are opportunities elsewhere. For example, Black Lake Technologies, its founder, Qiang, telling me about how he's investing in taking manufacturing here in China to the next level, using AI to make it into a tech powerhouse, really making that capacity building among factories in China easier. That drive sent overseas because the companies that he works with here domestically in China are trying to expand overseas. So he sees opportunities for opening a business in Vietnam, in Saudi Arabia. But the underlying tone, though, is that it's a really ruthless market here in the Chinese startup ecosystem. Take a listen.
The most competition is in China. Yeah. Globally, that is fine. Especially brutal in these areas. You know, there are giants, all giants today, and we can survive in those giants. That's because our vision, tech vision, is the front compared with the competitor in China.
Chinese tech sector is extremely competitive, right? I mean, you cannot even say this is like ruthless competition. And now we are seeing the best, this is the fittest of the survival, and these are the best and the most disruptive players on the stage.
Funding has been really difficult in the past year. Of course, we're not only talking because of geopolitical tensions, but the economic headwinds that China faces. In fact, Bloomberg Intelligence thinking that we might see some sector consolidation when it comes to artificial intelligence as soon as the next 18 months. Still, when it comes to AI, of course, monetization, making profits faster is going to be key for these entrepreneurs in the next era of more uncertainty globally. Haidi, Avril?
Asia Trade co-anchor Sherry joining us live from the World Economic Forum in Tianjin. Now, China's rise in the global tech race is in focus in our new show, Bloomberg Tech Asia. Catch the premiere on Friday at 8:30 a.m. Hong Kong time. That's 8:30 p.m. Thursday in New York. Plenty more ahead. Keep it here with us. This is Bloomberg.
Take a look at how futures in Europe are opening up at the moment as we see that sort of sigh of relief being played out across Asian markets in the early part of the session as a fragile ceasefire continues to hold. It is a cautious open, but we are seeing upside when it comes to Euro Stoxx 50 futures up about 0.3%. German DAX futures also looking pretty positive as, of course, uncertainty when it comes to the US commitment to NATO continues.
What's your take on the oil price situation right now, and are you concerned?
I love it. It dropped almost $10 yesterday. I put out a statement, get it down, because a lot of people aren't able to do things when the energy goes down. We're going to have a lot less conflict.
President Trump there speaking to reporters aboard Air Force One. Separately, the president has signalled that he wants to keep oil flowing out of Iran. It's a stark departure from an earlier strategy of squeezing Iranian energy exports to apply pressure at the negotiating table. Take a look at what we're seeing when it comes to two-day trading for crude markets. We've seen, of course, that downside of about 5% over the past 2 days of oil prices slumping, that risk premium just gradually being removed as we have this ceasefire, as fragile as perhaps it can be characterised as, holding for now. There's also some concerns about broader oversupply with an inventory report out recently as well. At the moment, though, we are seeing both WTI as well as Brent crude trading up by just about over 1% in the Asian session. The survival of Iran's regime is now in focus after the Israeli and US attacks on its nuclear program, the weakening of its proxy forces in Gaza and southern Lebanon, and only tacit support from its traditional allies, China and Russia. For more, let's bring in Eric Lobb, who's the Associate Professor of Politics and International Relations at Florida International University. He's also a non-resident scholar at the Carnegie Endowment for International Peace Middle East Program. Eric, great to have you with us. We know that there was an expectation of sort of a galvanization of domestic support, the rally around the flag effect from a conflict. Now that there is a ceasefire, now that we've seen sort of overtures from really the US, Israel and Iran to try and keep this ceasefire together, what does the level of support for the Ayatollah and the leadership look like? And are we still looking at the potential for uprising and for regime change?
Well, thanks for having me. And it's really hard to gauge the level of support for the regime. And of course, we could think about a compartmentalization among some Iranians, where some of them, of course, remain vehemently opposed to this regime, even more so with the feeling that this regime has put them in a tenuous, to say the least, situation. But nonetheless, we saw over time as Israel and the United States was exerting more military pressure on Iran and attacking its territory, that people were able to separate their feelings of antipathy for the regime with feelings of nationalism to protect the homeland and to push back against this military pressure being exerted by the United States and Israel.
Eric, do you think when it comes to nuclear capability, nuclear weapon capability, it's more of an inevitability? Does this latest conflict simply sort of embolden convictions within Iran that this is something that they need and perhaps need to develop more quickly?
Well, there's certainly accelerated and intensified the debate around this issue, even since October 7th, 2023, with the Israel-Hamas war in Gaza, and more pressure being exerted and degrading by Israeli forces of Iran's partners and proxies of the region, Hamas in Gaza, Hezbollah in Lebanon, of course, the fall of the Assad regime. The Islamic Republic was feeling increasingly vulnerable from a security perspective. And of course, having for the first time ever engaged in direct strikes with Israel in 2024 twice before this most recent war over 12 days. And so some have argued even before that Iran should make a move towards weaponization of its nuclear program to have the ultimate deterrence against Israel and the United States. And others see that there might be risks in that, particularly with the infiltration of Iranian security and military by the Israelis and Americans, which we saw on full display during this war, risking that this might lead to a further escalation. So right now we're just seeing a debate, and we also have to see an assessment of the damage that's been done to the nuclear program before we see what direction they might go, whether it's to negotiate with the United States international community or to talk more about weaponization.
On the assessment of the damage potentially to these nuclear facilities, I think that's also part of how difficult it is to make any sort of assessment without the presence on the ground. But I was also wondering, what is your sense when it comes to the regime, perhaps how united it is? Is there a sort of division between the ones that are more pragmatic versus the ones that are more idealistic?
Right. Well, on the surface and in public, we're seeing a great deal of unity between what would normally be factionalized elites, between hardliners and, as you've indicated, more pragmatic and moderate elites. But behind the scenes, apparently, there are, of course, debates and divisions, as I indicated earlier, where you have hardliners trying to assert themselves, where they feel that Iran has become increasingly isolated, increasingly under attack, and wanting to take a more hardline stand and further militarize not just the military establishment, but even the political establishment, taking even a harder line stance against the United States, which it feels it could no longer trust, or even trust less than before, against Israel, which it doesn't necessarily trust that's going to maintain this ceasefire and cessation of hostilities over time. And these voices are becoming seem to be becoming stronger in the military and political establishment vis-a-vis the more pragmatic voices and moderate voices. For example, we heard today that the reformist president, Masoud Pezeshkian, still talked about negotiating with the United States international community over the nuclear program, but his voice may face competition and he may even be drowned out by some of those more hardline military and political elites.
Eric, the debate about potential for regime change rages on. I mean, how dangerous would that be? What would some of the potential alternatives in terms of leadership in Iran be if there's a sort of political or power vacuum?
Well, there really is no political vacuum because the United States and Israel left the political establishment led by, of course, Supreme Leader Ali Khamenei, largely, if not entirely, intact. And the people that were assassinated were senior military commanders and nuclear scientists. And so even with this political leadership intact, I mean, there really is not a very large, if any, vacuum that we could see. And then contingency plans were put in place when there was talk among the Israelis and Americans that there would be regime change. There were reports that Ayatollah Khamenei had already selected 3 potential successors in case he was assassinated in his bunker. And then they were very quick as well with the institutional depth that they have as a state compared to some of the non-state or quasi-state actors that they work with in the region, refill and replenish quickly their military chain of command intentionally to maintain the resistance against what they perceived as Israeli and American aggression. And so we have a scenario, I think, that's far from regime change, although, again, internally there may be shifts in dynamics internally within the political and military establishment to adjust to this war.
I wonder what their external and alliance options are, right? We've talked at length about the weakening of the proxies, particularly over the past year. We've talked about the sort of rhetorical rather than substantive support from Russia and China. But I know there's also sort of overtures to African countries, for example. What allies are left for Iran going forward?
Well, for a long time, really since 1979, Iran has operated from a place of strategic loneliness and isolation and seeking friends wherever they can find them. So African countries in the global south, in Africa and in Latin America that have this anti-imperialist posture, that believe in non-alignment and multilateralism or multipolarity, are countries that Iran sees as potential allies and friends and has made overtures to over the years. But in the region itself, of course, the options are limited, and even outside the region, particularly, as I mentioned earlier, with the fall of the Assad regime in Syria, with its partners and proxies having been degraded and being very timid during this war, and even, as you said, Russia and China at times embracing Iran, but of course also having relationships with Iran's competitors and rivals in the region. I mean, one area where Iran has made strides is with the Arab Gulf states, which feel caught between Iran and Israel and have over the years engaged more and more with Iran. And we've seen Qatar recently help broker this ceasefire that came into effect today. So that's another area where Iran may lean on more moving forward in the region.
Eric, I wonder also if you'd be able to weigh in. What are some of the economic realities that are being faced by ordinary Iranians at this stage?
Well, many ordinary Iranians are suffering or dealing with adversity. This war is not going to help matters. based on reports I saw coming out of Iran the last 12 days, people put politics to the side, many people, and we're just talking about survival. And there was a lot of fear and anxiety, sorrow, and even shock about how quickly the security situation had degraded. And unlike on the Israeli side, Iranians were not even given advance warning. There were no former shelters where they could seek haven when Israeli airstrikes were coming. And so now we have people that are going to recover, assuming the ceasefire holds, even before we talk about putting food on the table or making ends meet, just to gather themselves psychologically and assess the damage to their own personal lives in terms of taking stock of mental and physical harm and suffering that they've inflicted over the last 12 days. And of course, they're going to face a great deal of economic adversity with the continuation of U.S. and international sanctions, as particularly if we see snapback sanctions in the fall, which may be coming from the Europeans, as well as economic mismanagement and corruption domestically.
Really trying time for ordinary Iranians on the ground. Eric, thank you for your analysis. Really appreciate it. Eric Loeb of Florida International University. Now let's take a look at how Asia markets are faring as well. I mean, we've been seeing how the geopolitical backdrop has been stabilizing a little. That's fueled Asia stocks for much of this week, seeing it cautiously optimistic as the focus also shifts to the Federal Reserve's monetary policy trajectory, among other things. We're flat on the gauges across the region at the moment. Haidi.
Well, coming up next, we're in Beijing for the AIIB annual meeting, hearing from the bank's president, Jin Liqun, about how trade tensions with the US are impacting China's outlook. This is Bloomberg.
Despite elevated uncertainty, the economy is in a solid position. Overall, a wide set of indicators suggests that the conditions in the labor market are broadly in balance and consistent with maximum employment. The effects of tariffs will depend, among other things, on their ultimate level. Increases in tariffs this year are likely to push up prices and weigh on economic activity. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
Jay Powell there speaking to a US House panel on Capitol Hill. So market expectations, particularly when it comes to bond markets, have really proactively started to price in what the expectation is for Fed rate cuts, even as Chair Powell, of course, refused to give that definitive timeline. Clearly, the sort of takeaway is that the positioning is a lot more dovish, provided inflation remains contained. You're seeing that across some of the gains we're seeing in Asian equities and currencies, but also the move across treasuries as well. Yields have been dropping as traders kind of brush aside essentially that tone of caution. So despite no firm commitments on rate cuts during the House testimony, markets took the hint as policy easing is still on the horizon. And that's been sort of broadly good news for treasuries that have been under so much pressure, particularly on that longer end.
Yeah, Haidi, and of course, when it comes to inflation, it's really about the uncertainty surrounding tariffs with this deadline coming up as well. In the meantime, we had the likes of the AIIB President Jin Liqun saying that free trade remains the strongest defense against rising tariffs. In an exclusive interview in Beijing, Jin also signaled openness to working with non-member countries, including the United States.
I invited the United States and Japan to join, and I had extensive discussions with them. Quite a lot of people were my old friends, right? We understood each other. So I respect the decision-making of any sovereign government, but I assure them, for whatever reason you choose not to join, it's not a problem. We can work together. For instance, as you know, we work with the U.S. and the Japanese financial institutions, and we are open to the professionals from U.S. and Japan. They are working very happily in our institution, and some of them are taking very important positions. Financial institutions and business companies are welcome to compete in international competitive bidding. So we are inclusive.
Your member countries are now grappling with the issue of tariffs. Are you seeing heightened lending this year, for instance, from member nations needing more funds as a result?
Tariff issue, certainly, I hope it will be eased, if not completely worked out. Tariff issues will certainly impact on some of our member countries, right? But also, I find this is going to lead to a different kind of scenario of global development. If the tariff is an issue, the best way to deal with the high tariff issue is for a group of economies to be working together, maintaining free trade. So in terms of the geography, population, resource endowments, I think ASEAN and the GCC and Central Asia, these countries can work together without any problem. And on the other hand, the European countries as a bloc is also interested in working with Asian countries. So I think there could be a solution to deal with the tariff. And if that is the scenario we've been looking at for kind of solution, probably tariff issues would be gone later on.
Mr. Jin, back in October you talked about how it will take time for stimulus to play out, and we're seeing that. Retail sales is rising, we're seeing even consumer stocks doing really well. Is it sustainable, or is this a sugar rush for the country?
You're referring to China?
To China.
Yeah, I think the government has issued a series of new policies stimulating the economy, and not just one shot in the arm, but also all these policies will be doing, I think, its job in promoting the private sector development, creating more jobs. And you will find most of the innovations, creative new things were developed by the private sector. You see how vibrant this is. And the government provides the enabling environment for all of this business in the economy to do what it should do.
AIIB President Jin Liqun at their annual meeting in Beijing, speaking exclusively with Bloomberg's Haslinda Amin. More from this year's AIIB meeting ahead. Indonesia's finance minister sits down with Haslinda Amin on Insight to speak about tariffs and global risks. You can catch that interview at 11 a.m. in Hong Kong. More ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade. China's sovereign wealth fund has cancelled the planned sale of $1 billion in U.S. fund stakes tied to some of the biggest names in private equity. Let's cross over to Hong Kong, and our China correspondent Min Min Lo is here for us. Min Min, what prompted this move? Figure maybe geopolitics is at play here. All this is happening pretty late into the sale process, right?
Yes, it is, because there already would be buyers and managers that are lined up according to sources. And we are hearing now that China Investment Corps, the state sovereign wealth fund, has indicated they are no longer planning to go ahead with the sale. So this indicates that perhaps China's assessment of the risk there because of U.S.-China relations perhaps has lifted a little bit and removed some of the pressure to offload a lot of this private equity, a planned $1 billion sale that the firm was planning to go ahead with.
What were the initial reasons for wanting to dump U.S. assets in the first place?
Yeah, so we reported this a few months ago, and at the time, U.S.-China relations was pretty tense, and there was the tariff war going on, and there is concern that a lot of Chinese capital being tied in less liquid U.S. assets could be a risk. And so we reported that the firm was looking to offload private equity, but also some alternative assets tied to real estate, infrastructure holdings, for example. But we understand from sources now that China Investment Corps has been trying to to convince or persuade outside firms that it remains committed to be a partner in the U.S., perhaps expressing some level of confidence given, the dayton that two sides agreed to in the UK. It looks like that risk is perhaps diminished now, and there is also concern from CIC, China Investment Corp, not to appear like they are retreating from the US as well.
Min Min, what are we seeing in terms of some of these Asian economies' exports to the US? And, what is the data telling us? How might this complicate tariff negotiations?
Yeah, so we are starting to get, all the May exports data coming out, and you're seeing a quite clear trend here, a surge in exports from Asian countries to the United States. We saw record high exports from countries like Vietnam and Thailand. Taiwan as well saw a 90% surge on year in exports in May. In Vietnam, Thailand, it was about 35%. South Korea close to record high as well. So it shows you that these Asian nations are really front-loading shipments to the United States, taking advantage of this temporary reprieve in tariffs. And you can see this chart. It shows U.S. trade deficit this year actually hitting record high because of all that policy gyration. So the question now is then, come July, what happens next when President Trump, if he were to fulfill his promise to raise tariff levels again, it is going to cause these exports again to really reverse, and it could wreak a lot of havoc for many of these Asian nations. And it's an opposite story. If you look at this chart from China, Chinese exports directly to the United States has slumped, so going in opposite directions of other Asian countries. A part of it is because Chinese companies have been diverting a lot of the exports to other countries. Some of it is legitimate demand, shifting that to other markets. Some of it perhaps still a bit of this rerouting of goods through third parties to the United States. But no doubt, come July, that is a period we want to watch, because the policy uncertainty is going to create a lot of challenges for the growth of Asian economies.
Bloomberg China correspondent Min Min Lo there as we head into the start of trading across Greater China markets. This is a picture when it comes to futures for US futures looking like it's going to be trading flat at the moment. Taiwan futures, though, seeing some upside of 0.6% as this fragile ceasefire continues to hold. Chair Powell also saying higher inflation, keeping the Fed on hold for now, but flagging this sort of expectation that we'll see rate cuts sooner rather than later. This is Bloomberg.